Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. This evening, we are going to discuss on this paper 8 indirect taxes on the topic called value of supply. So as usual, before we start with our discussion, let me have a confirmation from you with respect to the audio and the video availability. Please, if you're able to have the audio and the video properly, put it into the question window so that I can go further with our discussion. And students, please make a note. This particular presentation, what you are seeing on my screen, this is available on Board of Studies ICAI website. So kindly make a download of this particular presentation for you to have for your reference purpose. And thanks for the confirmation, Priya. Let's have a continuation with this topic called value of supply. In today's evening, we are going to have a discussion on few of aspects why we need to study this topic called value of supply. We will have few examples to take for us to understand in day-to-day transactions what aspects come in as a challenge in terms of identifying the value on which I have to pay GST. Also, we will have a few definitions connected with these concepts to understand how we apply these valuation aspects. We will have a detailed walkthrough of section 15. I'll give examples at various stages for us to understand how this section 15 has to be understood. Connected with that section 15, we have chapter 4 of Cgst rules. This chapter 4 gives us a guidance. When we have challenges in terms of applying this value of supply, how each transaction has to be understood. So I'll take you through this particular chapter 4 of Cgst rules. At the fag end of this particular presentation, I have a slide where the end of this particular chapter, reading this particular chapter called value of supply. What is that we need to have preparedness for our examination point of view, right? So these are the basic aspects which we have kept in mind for our discussion. To start with connected terminology. In today's discussion, we will discuss on what is a value. What is a value on which I have to pay GST? Before I start with this particular term called value, I take back your attention to the previous session where I have given a citation of one case law, Supreme Court judgment in case of Govind Saran, Ganga Saran. This is a case law which has been set in the state of West Bengal under the sales tax era, where Honorable Supreme Court has made it very clear. Any taxation statute to levy a tax, there are 4 pillars which needs to be clarified. The particular aspect, first aspect on what is a transaction which is subjected to tax. Second, who is the person who is subjected to tax. Third, what is the rate of tax. Fourth element comes in what is the value on which this particular tax has to be applied. So these are the 4 pillars, 4 principles rather, which has been clearly set by Honorable Supreme Court in the case of Govind Saran, Ganga Saran. So the 4th element of this particular case law is called valuation. So our GST law have understood that these elements of tax in statute have to be made clear. That's how this section 15 has come in front of us. So whenever we talk about a value, how do we measure the aspect of value? If someone asks, say if I have to ask, say Priya or Tejo, Priya, if I have to say we have gone into a restaurant, we had our breakfast and we have paid a sum of ₹500 rupees. When I have paid 500 rupees, I have paid say 450 rupees for the breakfast what we have consumed, and say I have given 50 rupees excess as a tip to the waiter. Now I ask a question, what is the amount on which the hotelier has to pay GST? Now she says that, sir, because we have paid 500 rupees, 500 should be considered as a value. Now I would go one step further to say, actually we have consumed our breakfast where the hotel person has charged 1000 rupees. I gave a small tip on taxation. Out of gratitude, out of love and affection, he has given a 50% discount to me. So definitely the answer changes from 500 is what I have given in cash. There is a component called 500 rupees, which is by way of a advisory. So the value generally, when we talk about the first aspect which comes into a human mind is the consideration. Consideration in terms of cash, consideration in terms of other than cash, maybe in kind. So this value has been interconnected with this term called consideration. So in any business common parlance, we need to understand what is the value in transaction. The value generally, when we say, it is not the money, it is not the consideration per se. In addition to consideration, there is something else which we need to think of. There is an aspect called free supply. Whenever there is a transaction, what is the value we pay? Is it the value what I pay for the items what they have given, or is that value allocated a portion on a free supply also? There is something called freebies. So generally when we go for shopping, buy two get one free, or there could be an aspect like you buy this particular laptop, there is 1 year warranty. So whatever happens within 1 year, I give a free service. So the value, does it include this free supplies? On 25th December 2021, I buy a laptop, say a laptop having a brand of Dell. When I buy this laptop, this manufacturer says the cost of this laptop is 65,500 rupees. 65,500 rupees. If you want to have 2 years warranty, you have to pay additionally a sum of rupees 5,000. Now, 65,500 plus 5,000, 70,500 if I have paid. In the process of these 2 years, if any sort of wear and tear, any sort of warranty, any sort of parts needs to be replaced, the value of that particular freebies has been already factored. So how do I measure this particular freebies in the course of my business? There is an element called agent. We have all heard this term called pure agent. So whenever we talk about this value, how is this term called agent, or rather pure agent, is relevant for us to measure this particular value? As we walk through, we will understand how this pure agent is connected. Then the last element we have is exclusion. What is the transaction value which I have to consider for the purpose of levy? So when we are reading this particular chapter, please make a note in your working note. As I take you through a couple of examples, make a running note along with the sections and references so that it will help you at the time of your examination. There is something called Section 7. Section 7, which talks about your supply. Vignesh sir has taken us through, by and large, this element called supply. What is covered in Section 7? What are the elements, 8 elements of Section 7? And along with Section 7, we would have studied something called Schedule 1, Schedule 2, Schedule 3. So whenever there is a business transaction, the first duty is we examine whether Section 7 is applicable. The next aspect what we have to apply is Section 9. Was there a levy? Will there be a levy? Couple of doubts come into mind, like say take example of your petrol and diesel. Whenever there is a transaction where there is a connected element of petrol and diesel, my Section 9, which talks about levy under Cgst law, keeps certain aspects outside of my levy. So petrol, diesel, alcoholic liquor for human consumption. Section 9 says that these elements are outside. So what is the value? I have to exclude from the purpose of valuation. The next element comes is your valuation under Section 15. So you will start with Section 7. You will go for Section 9, that is your levy. You will go for Section 12, Section 13. In the last class, we have discussed on time of supply for goods, time of supply for services. In addition to these three, the fourth element is called value, the amount on which I have to pay my GST. Please connect this particular 4 sections with this settled Supreme Court judgment of Govind Sir and Ganga Sir. where what is a supply, Section 7 clarifies. Whether there is a levy, Section 9 clarifies. What is the time of supply, Section 12, Section 13 clarifies. Finally, I come to something called what is the value on which I have to pay GST. Section 15, read with Chapter 4 of Cgst rules, comes into picture. Please make a note of these 4 elements so that it will be easy for you when you recap for your examination. Moving further. In this particular transaction, we need to understand what is the transaction value whenever there is a transaction between two persons. Contractual terms of supply. The other day, I was talking to you with respect to identification of place of supply. When we have read Section 10, we have understood how do we apply place of supply provisions. A transaction connected with supply, that is delivery till the doorstep of the customer. A transaction where the transfer of title in goods happens at my doorstep. We have classified that as Ex Works, CAF or FOR. So these are a couple of commercial terms which are connected to a transaction where we understand, should I include the transportation charges for the purpose of levy? Should I keep the transaction charges outside for the purpose of levy? Treatment of transactions between related parties and unrelated parties. So naturally, whenever we talk about value for the purpose of payment of GST, is the value in consideration, is the complete or is there something incomplete? Is the price underdetermined because there is a related party transaction? Generally it so happens that the price which is there at arm's length between unrelated parties may not be there in case of a related party transaction. So the law explains how do we deal with your related party transactions. Moving further, there could be some sort of adjustments in my transaction where the obligation of supplier has been met by the recipient. The obligation of supplier to incur some expenses have been met by the supplier. How do we understand those particular transactions? When you are reading your costing, there is something called CAS 4, Cost Accounting Standard 4. This Cost Accounting Standard 4 talks about a transaction where how do we determine the value of cost in case of your job work related transactions, in case of your related party transactions. There is a connectivity of my section, rule 30 connected with your CAS 4. Under central excise, under erstwhile central excise, there was a related party transaction. There was a reference to mandate CAS 4 certificate. Post GST has come into picture. We don't use a reference to CAS 4, but for academical purpose, please understand that there is a reference to Cost Accounting Standard 4, which talks about a transaction where a cost has to be determined. Moving further, guidance what we need to take from Section 15, read with the rules, when there is a transaction which was not envisaged in the Section 15 as of today. As I have been telling, my dynamics of business change on day-to-day basis, where it is not easy, it is not possible to elaborate the provisions of Section 15 to current date. Considering the future requirements, the law has been tweaked to some extent where Rule 31 was brought into picture to keep in mind how I determine the value considering the business transactions. I have picked up few examples for us to understand how this particular transaction changes the mind when we have to ascertain the value of transaction. This example 1, I have taken this example from ROC annual returns filing point of view. All of you would have seen in your internship, articleship days, how we do the accounting for these particular transactions. Let us take example of a professional chartered accountant who has to file this ROC returns. In the process of filing ROC returns, he remits a sum of ₹300 to file a particular form. There are various forms, say MGT1, MGT2, or ADT1, or DAR1, DAR2. There are various forms which a company has to file with ROC. On behalf of ROC, I, as a professional chartered accountant, I file a form with ROC. In the process of filing, ROC collects a processing fee called rupees 300. I, as a chartered accountant, charge a sum of rupees 5,000, saying that, so for doing this minutes of preparing this particular minutes, preparing this particular documentation, and doing the filing with ROC, 5,000 is the charges. Now, question comes here is, what should be the value of supply? Should I consider 5,300 on which GST at the rate of 18% has to be charged? Or should I keep this 300 rupees away, saying that it is a reinvestment for me as a pure agent? I talk to the client saying that whatever expenses I have to incur at ROC in the process of filing your return forms, I claim those expenses at actuals as a pure agent. So what is my section 15 talks about this particular transaction? Next example, most of the students have this particular element of doubt where they always question, so why is the diesel is being charged? Now this example I have picked up from that particular backdrop. Let us take example of a hiring of a DG set. Hire of a DG set. Now in this particular transaction, there is a contract between the company and the service provider. What is the contract? Hiring of DG set. Now when we think of DG set, I'll give an example. So there is a company which is into a movie production or film production. This shooting generally happens at a set which is away from a fixed location. So there is a studio. In that particular studio, a particular movie has to be shooted. So when you're doing a shooting, you don't have a power supply straight away from the respective local government, the power distribution local state authorities. So what you need to have? We need to have a service of this DG set. So when a private limited company, which is into movie production, they hire a service provider for the purpose of providing uninterrupted power supply. We call that as a contract for hiring a DG set. Now what is this contract? This contract is for providing a uninterrupted power supply. As a cost accountant, as a chartered accountant, as an accountant, I have to determine how do I give a costing to my particular client. So when I sit across for doing the costing, I take the number of mission hours, I take the cost of diesel, I take the cost of supervision, admission, administration. All these elements I make as a bundle, and I say, sir, per hour I charge you something called 2,000 rupees. So this DG set is running for 10 hours. 2,000 into 10 hours, 20,000 would be my cost. Now the question comes here. When I look at the cost breakup, there is an element called machine hours. Now, why do I call machine hours? The element of your sunk cost, the element of operating cost. I have purchased a DG set for a sum of rupees 20 lakhs. This DG set has been given for me to run for say 10,000 hours. Now, this is the operating capacity which was decided by the manufacturer. So what I do? This 20 lakhs divided by 10,000, I get say 2,000 as an operating cost. Now this 2,000 to that cost of diesel per hour, I need to consume say 10 liters of diesel. 10 into say 80 rupees, 800. Now I derive something called cost of this DG set per hour. So when I look into the elements of costing, there is something called diesel. Most of us know that diesel is kept outside of the petrol and diesel is kept outside of the levy under section 9. So what comes into value of supply? How I as a professional take a help from this section 15 with respect to identifying a value of supply. Can I say that 20,000 is the cost of this particular hiring charges less diesel, say 8,000. The net value of 12,000, can I say on this 12,000, I'll be charging GST to you? Can I say so? This is an example which we have to keep in mind when we look into the provisions. Example number 3. Most of us get connected with this particular example. The picture what you see on my screen is a bullion. Most of us have this family jewelry. Hindus generally we have this sense of attachment to jewelry. So whenever there is an occasion, we get something as a gift from the ancestors. So that particular ancestral gift over a period of time, like if you want to have that as the ornament, we continue to keep as an ornament. Rather, if you want to convert that as a bullion, maybe for the future purpose, like when you need money, when you need a loan, when you need actually an ornament, this bullion helps me to get that particular ornament. So let's take example of this ornament. Say an individual goes to a particular jewelry shop for purchasing an ornament. So when he goes to this particular jewelry shop, the shopkeeper says a cost of a particular ornament is rupees 1 lakh. I say to the shopkeeper saying that, sir, I have a bullion. Bullion is the this particular bar, what you have been seeing on the screen. I have a bullion which is worth 75,000. So instead of paying 1 lakh, I pay you cash, or I give you a check for 25,000. The balance amount, I'll give you this bullion for 75,000. So in this particular transaction, assuming for a moment, the shopkeeper squares off this particular 1 lakh ornament with that bullion of 75,000, and he says there's an outflow of ornament worth 25,000. Can that mechanism be acceptable? How does the valuation mechanism goes for identifying what is the value on which particular supply I have to pay my GST? And also important, at a point in time, that is say 2 years after this transaction takes place, I as a shop owner, I have to prove to the GST authorities that, sir, I have sold an ornament worth 1 lakh rupees. For this 1 lakh rupees, I have received the bullion which is worth 75,000. Assuming for a moment, this bullion is having a weight of say 75 grams. Assuming 10,000 per gram, 75 into 1,000, 75,000. Now I have to establish that I have received cash of 25,000 in kind or in exchange the bullion of 75 grams. This is a paperwork which is relevant for me to prove as a evidence after a period of 2 years. Now, what are the relevant documents we discuss under section 35? But for a moment, when we think about this transaction, as a professional, we also need to think, how do we record this particular transaction? So when I raise a sale invoice, should I need to mention the weight of ornament, say 100 grams, less bullion received 75 grams, net consideration in cash, say 25 grams into 1,000, 25,000. This is how can I prepare my invoice. Now, inventory also has to be maintained in that fashion. So this is my third example for which we need to keep in mind how the valuation mechanism works, what documentation I have to keep, and how do I present this when I file my GST returns. Moving further, there is a term called agent which has been defined in your GST law. Refer to your page number 7.3 of Institute material, which talks about a person includes a broker, commission agent, arhaita, del creditor agent, or an auctioneer, or a mercantile agent, by whatever name you call, who carries on the business of supply or receipt of goods or services on behalf of another. Now, why is this term agent relevant for us? There is something called valuation. Now, principal agent, there is a related party transaction. Whenever there is a related party transaction, on the basis of the value which is derived in the hands of agent, there is a back-to-back connection with the value in the hands of the principal. So from that particular backdrop, my definition of agent is something we need to keep in mind. Moving on further, consideration. This term consideration, page number 7.3, is little important from valuation point of view, from your determination of supply point of view. Consideration in relation to supply of goods or services includes a payment made or to be made, whether in money or otherwise, in response to, for the purpose of inducement of supply of goods or services, whether by recipient or by any other person, but shall not include subsidy given by the central government, state government. So this particular element says that there is an exclusion of subsidy. Whatever money I receive or other than money I receive, money or otherwise. I was giving an example with respect to hotel example. I go to breakfast. I go to a hotel for having a breakfast. I pay money of 500 rupees. The balance 500 is otherwise. That is my consultation given in terms of barter. That is a consideration. So whole aspect together will be called as consideration. Moving further. Monetary value of act or forbearance. Monetary value of act or forbearance in respect of or in response to a supply, and also does not include subsidy given. Now here they are referred to something called act or forbearance. Now everyone understands this activity of act or forbearance. This is connected with something called LD. We had discussed this example of LD, liquidated damages. In the previous session we were talking example of L&T and Infosys. Infosys gave a contract to L&T for the purpose of a construction activity in a span of 6 months. Assuming that if there is a time spent beyond the agreed upon time, there is an invocation of this clause called LD, liquidated damages. So this term consideration also expands its scope to say the monetary value, whatever is the value you have put into your contractual term, which is towards your act or forbearance, that is your tolerance. So activity which has been accepted or tolerated can also be called as your consideration. Again, as usual, excludes your subsidy. Now, this term subsidy is generally to be understood from your accounting standard 12, which deals with your government grants. Any particular business where there is a subsidy received from the government, that has to be kept outside the definition called consideration. I'll give an example to understand this term called subsidy. We have this midday meal scheme, or there is something called, if you happen to look at South India, in the state of Tamil Nadu, we had this canteen called Amma canteen. Similar to that concept in Karnataka, there is another canteen called Indira canteen. There are canteens which are run by the respective state governments where the cost of meal is at a subsidized rate. Assuming for a moment I am a contractor, I get into a contract with the state government of Tamil Nadu saying that I provide breakfast, I provide lunch in this particular Amma canteen. Any customer who walks into this Amma canteen, the cost of breakfast is 10 rupees. Of that 10 rupees, 5 rupees will be collected from the customer. The balance 5 rupees is given by the respective state government. So a subsidy which is given in connection with the supply is kept outside your scope of consideration. Another example, fertilizer. A manufacturer of fertilizers, when they sell fertilizer to farmers, generally the state governments come forward and say a fertilizer which is having a selling price of 250 rupees, 50 rupees is given as a subsidy by the state government. Balance 200 rupees is what you have to collect from the farmers. So when we talk about this term consideration, please keep in mind subsidy given by the state government, central government has been kept outside the definition of consideration. Moving further, provided that a deposit given in respect of supply of goods or services shall be kept outside from this particular supply until and unless this has been appropriated as a consideration. In general, any money which is received as a deposit, security deposit for rental premises, a deposit which is refundable in nature, cannot be forming part of my consideration. Another example, say manufacturer of soft drinks or ITC or supply of your FMCG products. To get entitled myself as a dealer, I give a caution deposit of say 10 lakhs. This money which I have given as a deposit shall not form part of my consideration. Please keep in mind, all these deposits does not form part of my consideration. Before I move further, let me just look at my question window. If there are any questions so far. Okay, Namita has a question. Supply of DG set is agreed to provide continuous supply of service. Please refer to this definition called continuous supply of service, Namita, where if it is a contract or an agreement between the service provider and the service recipient, a contract exceeding a period of 3 months, then yes, it is a continuous supply of service. Otherwise, no. Coming back to my presentation, market value. Market value, in simple terms, means the full amount which a recipient is required to pay to obtain the goods or services, or of a like kind of quality above the same time. Generally, in general, market value is as good as your arm's length price, arm's length transaction. To get a particular item, to obtain a particular good or services, the value which you have to pay is called as your market value. In case if that particular monetary value is not available, the value of like kind and quality can be considered as your market value. Money. Money, in simple terms, it includes all the legal tender, which is as good as your foreign currency, check, promissory note. Why we refer to this term money? When we read section 15, it talks about consideration in money. What do you mean by money? Money which is something which is used as a tender for transaction, a currency, check, promissory note, bill of exchange, letter of credit, draft, all this form part of my money. But shall not include a currency which is held for numeric value. Money which is just held for numeric value generally is kept outside. Other than that, all the transactions are part of my money. Now, this is my broad perspective of section 15. My section 15 has got 5 subsections. I repeat, section 15 has got 5 subsections. My first subsection talks about transaction value. What is a value in transaction? How I consider that as a value for the purpose of payment of GST. When I talk about transaction value, it should be an arm's length price. It should not be between related party. And consideration is fully in terms of money. So if I have a consideration in terms of money, it is not between related party transactions. Consideration is measurable. Then I go with my transaction value. In the process of defining the transaction value, I go on to ascertain, I go on to examine what all elements I can include for the purpose of my transaction value. When I say what to include, what to keep away, that is discussed in my subsection 3, which predominantly talks about my discount. There is subsection 4, which talks about manner, how I can derive the manner how I can choose when there is a failure of my transaction value. So reference to my rules gets evaluated, linked from this particular subsection 4. Then finally, the ancillary provision, the government has the authority to prescribe what is a transaction value, notify what is a transaction value. Why? Because I cannot foresee all the transactions. If some unique transaction come where government feels that this should be determined as a transaction value, they have kept the ancillary power to notify certain transactions where a value has to be identified. So this is a broad picture of my section 15. To start with section 15, subsection 1. My transaction value, that is the value of supply of goods or services, shall be a transaction value where price is paid or payable. Where price is paid or payable. My consideration is paid or payable for the same supply of goods or services, or both, where supplier and recipient are not related. Supplier and recipient are not related. Further, price is a sole consideration. Now, what they say, I accept something as transaction value where the supply of goods or services is between non-related party, and price is a sole consideration. Price is a sole consideration. Now, whatever I have printed on my tax invoice as the value for supply, blindly it will be accepted as transaction value when two conditions are satisfied. What is that? There is no related party transaction and price is a sole consideration. Means the value what I have printed on my invoice is a sole consideration. I'll give an example. Before we go further, I'll give an example. I happen to sell a particular laptop. I sell a laptop for rupees 65,000. I receive sum of rupees 2,000. I receive sum of rupees 2,000 towards laptop bag. Now when I sell a laptop, along with laptop, my laptop bag is required. Now assuming that this laptop has to be delivered at a doorstep of customer. Instead of me going to the shop, I place an order where this laptop should be delivered at my residence. Laptop cannot go on its own. So what I have to do? I need to do packing. The cost of packing is 300 rupees. And this box which I have packed, this needs to be delivered at the doorstep of customer. The transportation cost is 500 rupees. Cost of laptop bag 2,000. Cost of packing 300 rupees. Cost of transportation 500. 2,300 plus 500, 2,800. Now, on the invoice, I have printed 65,000. Is 65,000 the sole consideration? Answer is no. I have received 65,000. I also have received 3,000. So I will not accept transaction value if price is not the sole consideration. Or I'll extend my example this way. The price of the laptop is 65,000. The price of the laptop is 65,000. I, as a customer, say to the shop fellow, saying that, sir, you are selling laptop for 65,000. I'll do this way. I have printers in my shop. I'll give a printer to you for a rupees 5,000. Please give me laptop at 60,000. Now, is the price sold? Is the money in transaction value, is that the price sole consideration? Is the 60,000 alone? Again, since 60,000 alone is not the sole consideration, because there is an exchange which is going to come, I would say I fail to apply transaction value. So please keep in mind, whenever we apply this subsection 1, it should be a non-related party transaction. Price is a sole consideration. Whatever I have done for inducing that supply, my money has been intact. Then I go for applying my transaction value. So please make a note of transaction value. Against that, write down non-related party transaction. Price is a sole consideration. Now, having discussed this, we were talking about related party transaction. Supplier and buyer, there should be a unrelated party transaction. So how do I understand that there is a relationship which has induced, which has failed for me to apply this transaction value? So whenever we talk about related party transaction, put a question to yourself. So how do I test this related party transaction? The first aspect comes into your mind is blood relation. Wherever parties of transaction, if there is a blood relation, we definitely call them as a related party transaction. What could be another way they're related? If there is a bonding artificially between the persons, what is an artificial bonding? So there is a employer-employee relationship. There's a bonding which is created by virtue of employment. Or if there is a partner, there is a sale of goods by a partnership firm to a partner. Again, there is a bonding of firm with a partner. There is again artificial relationship. So when there is a legally recognized partners, again I call that as a related party transaction. What else could be a related transaction? Where there is a control on the transaction either by the seller or recipient. Whenever we talk about a control, buyer is in a position to command seller or seller is in a position to command the buyer. When there is a control, one party on the other, again I can call that as a related party transaction. So my entire related party transactions, I can put into three buckets by way of a relation between the seller and buyer. Hope this particular bonding is clear. Please make a note of this particular bonding. Each of this we will elaborate and examine to see whether there is a related party transaction. So examination, what is relevant of this particular related party transaction? When there is a question framed in your examination, they'll put it this way. XYZ Limited, Private Limited sells a laptop worth rupees 85,000 to Mr. A, within brackets, employee of Gurgaon branch, for a sum of rupees 85,000. Examine the principles of section 15 or examine the principles of valuation or what is the value of supply. Then you will see that XYZ Private Limited is a seller, Mr. A is an employee. Now, can I call that 85,000 as a transaction value? It should be between non-related parties and price is the sole consideration. So what you will say, because there is an employee-employer, there is a relationship, I fail to apply my 85,000 as a value of supply. So I'll say that section 15, subsection 1 straight away may not be applicable because there is a related party transaction. Inducement of that relation on the price, that is your transaction value. So this is how my transaction value relevant for me to examine this provision. Now, I was talking about your artificial bonding. So how do I create artificial bonding? Where the persons are legally recognized as partners. I was talking about a partnership firm. I was talking about a partnership firm with a partner or employer-employee. Third scenario, persons or officers or directors of one another business. The sale transaction happens between the persons where one of them happens to be an officer, director of another business. So generally when we look at these particular people, they are in a position to control, they are in a position to dominate the transaction value. Example, company purchases Toyota vehicle for a sum of rupees 10 lakh. This vehicle, after a period of 1 year, has been sold to one of its debtors. The value, assuming for a moment the straight line method of depreciation at the rate of 10%, assuming 1 lakh is a depreciation per year. After a period of 1 year, my book value of asset is 9 lakh. This book value of asset for 9 lakhs has been sold to a director and I have received a money of rupees 5 lakh. Now, can I say, is this a transaction value? Director is in a position to influence the company to sell that vehicle whose market value is 9 lakh for a sum of rupees 5 lakh. So there is an inducement, there is an influence of that related party transaction on the transaction value. So when we talk about related party transaction, with respect to this artificial bonding, there are three set of people. One is legally recognized as partners. Second, employer-employee relationship. Third is this officers or directors of one another business. You can refer to page number 7.9, where this related party transaction I have put into this particular fashion for easily recognizing the bonding. So this is my three category of artificial bonding. Third, so there is a control. What is that? A person who can control the other person with respect to the transaction. How can I exercise that control? A person who directly or indirectly controls or holds 25% or more outstanding voting stock of shares by way of equity. So if a person, could be a seller, could be a buyer, if one of the party owns more than about 25%, holds 25% or above, so minimum 25% if I hold as an equity, it is presumed that I can induce that particular transaction, I can induce that particular transaction value. So whenever we talk about a control, in case of a corporate holding equity to the extent of 25%. So what if it is not a corporate? One of them directly or indirectly controls the other. So how do I do that? By virtue of your dealership. Say I am a dealer appointed by Maruti as a agent or as a dealer, authorized dealer. I undertake sale of only Maruti vehicles. In this case of control, directly or indirectly, Can't Maruti control me as a dealer? Answer is yes. There is a related party transaction, right? Both of them are directly or indirectly controlled by a third person. Now, this seller and buyer may not be related, but this buyer and seller has a middleman called a third party. This third party is controlling buyer, this third party is controlling seller. Then again, it is called as a related party transaction. Together, this buyer and seller, together, they can control a third person. Now, example, say Maruti's case. Now, Maruti has got a supplier who supplies 70% of raw material, Mr. A who supplies 70% of raw material, Mr. B who supplies 30% of raw material. A and B put together 100%, they control the supply to Maruti. Now, this is a clause 7 where two people together can control a third person. So, this is how we examine this term called control. My related party transaction, this is how I need to keep in mind. Reference to institute material, this is picked up from our institute material for ease of understanding. So when I look at my transaction value, the supply is between non-related parties and the price is the sole consideration. Then whatever is the value I have mentioned on my tax invoice, that shall be the transaction value I have to adopt. So this is what my section 15 subsection 1 talks about. Let me see if there are any questions so far. Namita says, what is the meaning of inducement? This term inducement is what I have discussed right now by way of this control, by way of inducement or by way of reducing the supply value. I gave example of this Toyota vehicle, Namita. The book value of Toyota vehicle is 9 lakhs as per books of accounts, which has been sold for a sum of rupees 5 lakh. How did it happen? Inducement by way of controlling. Director is in a position to control the company to sell that vehicle for a sum of rupees 5 lakh. Tejo has further, in case of exchange offer, what will be the value of supply? Tejo, there is a rule 27. When I come to the rule, I'll give a clarity with respect to this exchange one. So just wait for another 10 minutes. We'll come to that rule 27. Now, section 15, subsection 1, transaction value is clear. Now let's move on to something called transaction value to include. My transaction value has to include, where I have just given an example where this is how we need to start reading my subsection 2. In this example, you can see that there are various vehicles which are given as a picture. Assuming for a moment, there is a company, there is a corporate who engages a service provider for the purpose of passenger transportation of their employees. So I have various, like I can use a four-wheeler for transportation and commutation of key top management people. I can use 20-seater till say 40-seater, could be a mini bus to a big bus for the purpose of transportation of my employees. The service is for passenger transport. The contract is for the purpose of employee transportation. Part of the contract, this particular service provider says, look, I have engaged a vehicle only for the purpose of flying with your company to your particular business. Part of this particular contract, if I as a service provider, if I have to pay a clean energy cess or a tax, if I have to pay the vehicle permit tax or the toll charges, all these expenses you have to pay me back because of the virtue of contract. I'll give example of Noida, your Gurgaon. There are many companies in this Gurugram. People who doesn't know this place, there is a state called Haryana. In Haryana, there is a place called Gurugram where all these automobile ancillary companies are having their operations. The employees from Uttar Pradesh, the employees from local Haryana, the employees from Delhi, they travel to this particular place of work and then they go back. Now, when a vehicle is coming from Delhi to Haryana, a vehicle is coming from Uttar Pradesh to Haryana, a vehicle is coming from Punjab to Haryana, there is something called road permit tax. Also, in the process of paying this particular thing, I pay to the National Highway Authorities of India something called toll tax, called toll charges. All these element of expenses, I say that because I have been playing this particular vehicle, I collect from you. That is, all these taxes, I have to get it collected from you. Then what shall be my value of supply? Now, this is one example we need to keep in mind when we come to section 15, subsection 2. I'm giving these examples for you to connect with this particular valuation in the examination and the problems that are asked for. First element, my section 15, subsection 2 says that any tax, duty, cess, fee, charge levied under any law for time being in force other than Cgst, UTGST or compensation cess, if charged separately by the supplier, this needs to be included in my value of supply. Let me just give a minute. Let me open my Excel file. I'll explain this by way of example so that you can easily connect with this particular example when a problem is asked for. Now, I was giving example of this corporate where the buses are hired for the purpose of passenger transportation, employee transportation. So I was talking example of this Gurugram, where buses do come from Uttar Pradesh, buses do come from Delhi, and also from, say, Punjab. So in between the states, I pay something called municipal tax or the permit tax. So one state to another state, commercial vehicles, I have to pay once in 3 months something called tax. So when I pay this particular tax, let me just open my Excel file. Hope you are able to see my Excel file. Now, one example I was talking about your permit tax. Second example I was talking about toll charges. Toll charges are not tax. This is a user license fee. User license fee. Third is your, say, green energy cess. Now these days you have this polluting vehicles. If you see our Delhi, for example, Union Territory, lot of norms, lot of conditions are there where the vehicle which is coming into Delhi should be this particular clean energy. It should be using only the particular permissible fuel for operating, plying that particular vehicle. So whatever tax I pay to the respective state governments, all this shall form part of my transaction value. My section 15 subsection 2 says that taxes if charged by the supplier. I use the term if charged. Now question comes here. The moment we talk about this, most of us as a professional chartered accountant, we ask a question. Sir, what if I raise a debit note? What if I show this as a reimbursement? Means we are talking about we are talking about this transaction way. The moment I say charge on the tax invoice, I have to show that these are the elements of expenses incurred. The human instinct comes. So what if I don't charge? I raise a debit. Says that. See, I receive some. There is a person who is donating, say 50,000. So the trust says that, look, you don't charge me 1.85, you charge only 1.35. 1.85 minus 0.5, you charge only 1.35. Say so? Because there is a person who is coming forward to give donation to this trust. Now, as an event manager, XYZ Limited Private Limited is supposed to incur this 5.6 lakhs where they need to pay to various vendors to organizing this event. Now, instead of paying 5.6, say actual, is 5.6 minus 0.5, only 5.1 lakh. Where my section 15, this subsection 2 says, comes and says, look, Expense, let me come back to my presentation. This subsection 2 says that amount supplier is liable to pay in relation to that supply, but which has been paid by the recipient. Now, that should also form part of my supply. So in this particular transaction, XYZ Limited, Private Limited, though there is a bill for 5.1 lakh, they have to say 0.5 lakh, which was paid by ABC Trust on behalf of XYZ Private Limited to the service provider. That is a fellow who is supplying food to XYZ Private Limited. This is what my section 15 subsection 2 says, where on behalf of the service provider, where an obligation is there on the service provider, which was incurred by the recipient, that shall also form part of my value of supply. Are you clear with this particular example? Value of supply, what to include? Any questions so far? Please post it to the question window. Tejo has a question. In case of exchange offer, Tejo, just wait for this rule 27 to come. Once I come with rule 27 with respect to your exchange, with respect to this offer, I'll give a clarity. Exchange offer, like buy two, get one free. Now, when this is an exchange offer, now price is a sole consideration. Now, it's a part and parcel. Like for benefit of other students, I'll put this question this way. Tejo has this question. In case of an exchange offer, hope I am putting this example right correctly, Tejo. I go to say this lifestyle. When I have to buy a particular shirt, there was a display saying that buy 3 shirts, get 1 shirt free. Now, I'm buying 3 shirts where I'm I'm getting 1 shirt extra. So for 4 shirts, my consideration, my money is only for 3 shirts. Now, the question here is, what should be the value? Can I go with the transaction value? That is to say, as per section 15.1, it is unrelated party. What I have received for 3 shirts, that is the only value. Answer would be, if it is between unrelated party, then the transaction value, the money what I have paid for 3 shirts, that shall be the transaction value. This is the answer to your question, Tejo. Moving further. There is one more question from Venkata Durga Rao. Whether the company can eligible for ITC on purchase of food for guests. Section 17, when we talk about input tax credit, we will have a detailed discussion, Venkat. Right now, section 17, subsection 5 has a restriction on this particular question in input tax eligibility. Next question from Venkat Durga Rao. Whether the company can claim ITC on providing transportation to employees by a transporter. Now, your questions are connected with input tax credit. Wait for this chapter called input tax credit. However, at this moment, answer is section 17, subsection 5 has a restriction on eligibility of input tax. I would request the students to restrict your questions to this chapter. It will be more interactive if you can bring the questions in connected with my examples. Moving on, next question. So the time of explaining debit note and reimbursement to donation point, nothing recorded. The time of explaining debit note and reimbursement to donation point, nothing recorded. Okay. There is a question from Janaki. Let me explain this. This particular 50 lakhs, there is nothing recorded. On record, nothing exists. Quite tricky one, Janaki. On record, if I have a bills received for 1.85 lakh, and if I bill to customer only 1.35 lakh, please look at this carefully. My purchases, when you look at my purchase, I've spent 1.85 lakh. But what is that I have billed to the customer? Only 1.35 lakh. Now, isn't it a distortion? Isn't it that you're having, like, no one will do business for loss, right? So this is a activity where the question of Namita, inducement. The trust has induced XYZ Private Limited to charge 50 lakhs, 50,000 less than the cost incurred. So they will set aside your transaction value. Fantastic doubt, Janaki. Answer to that question, there is an inducement. The moment there is an inducement, transaction value will be set aside, right? That is the answer to your question. Let me come back to my presentation. Yeah. So clause B talks about your taxes. it talks about the money what was spent by the recipient on behalf of the supplier. Hope you are able to see my presentation. Moving on further, clause C, that is the third element. Incidental expenses, which includes commission packing, which is charged by the supplier to the recipient, and amount charged for doing anything done by the supplier in respect of the supply of goods at the time or before delivery. Now I was giving example of Dell laptop. If this Dell laptop was sold to a customer, so price at shop is 65,000. Customer says, sir, I don't want to buy it here. I like if for a moment I stay in the state of say Karnataka. I happen to visit to Mumbai for a business meeting. In the process of business meeting, like I go for shopping, I want to buy a particular laptop. The cost of laptop is say 80,000 on shelf. Rupees 80,000 on shelf. I say, look, the laptop is good, but I don't want to buy here. I cannot carry it back. Please give a delivery at my residence in Bangalore. Now the question comes here. Is the shopkeeper going to dispatch at 80,000? He says, sir, I cannot give it 80,000. I need to put into a box. I need to spend 500 rupees. I need to give it a transporter. The transporter charges me 1,000 rupees. So 500 rupees for packing, 1,000 rupees is for transportation. Money charged by the supplier to the recipient when before or at the time of delivery. So this money of 1,500 spent before or at the time of delivery. That means I collect upfront along with 80,000, or at the time of delivery I collect something called 1,500 called COD, cash on delivery. Let me come back to my example. Section 15, subsection 2, clause C. Incidental expenses. Charges collected before or at the time of delivery. Now, let's take the same example where supplier and buyer. Supplier is in Maharashtra. Buyer is in Karnataka. Sale value on shelf at rupees 80,000. Packing come delivery 1,500. Now look at this transaction. Total value 1,500. Now most of the time, so it so happens that buyer says that okay, I'll buy now 1,500. I'll please mark as COD, cash on delivery. Why? How do I trust this laptop will come in a safe condition? How do I know that you have really spent 500 for packing it in a good fashion? I cannot. So this section 15 says that any money you have charged for this particular supply, which is called incidental expenses. Please read that. Incidental, including commission, packing charged by the supplier to the recipient for making that supply at the time or before delivery of goods or services. So this money, what I have collected from customer, shall be my transaction value. So in this particular scenario, transaction value shall be rupees 81,500. Now, I'll slightly alter this particular question this way. Delay in delivery by 2 days. Customer paid only 500 rupees. Now, what happens here? So you have said that 81,500 is going to be my transaction value. On COD, the promise was that it will be delivered in 7 days, but it got delivered on the 9th day. My COD from 1,500 has come down to 500. So what will happen? My COD will be my transaction value will be 81,500 minus 1,000 rupees for LD, that is your liquidated damages. So the consideration what I have received, I don't have anything in kind. Actually, I have received 80,500, so that will be my transaction value. Though I have communicated to customer, sir, 500 for your packing, 1,000 rupees is for delivery. So here what is happening? I get only 500 rupees. So customer is paying 80,500. My transaction value shall be 80,500. This is my clause C. Clause C. Next, moving on further. Interest, late fee, penalty for delayed payment of consideration. Now, part and parcel of my transaction, always we in the invoice we mention, if the money is not paid within the due date, we would charge interest at the rate of 18% per annum or 24% per annum. Some sort of clauses will be there. I charge a late fee, I charge a penalty. So whatever money I have received by way of interest, late fee, penalty in relation to delay in payment of consideration, that shall also be forming part of supply. That shall also form part of my supply. Now, there could be a question from some of you saying that, sir, interest is exempt under GST. When Vignesh sir has taken up this session, all along Vignesh sir was saying that interest is not chargeable to GST. Please keep in mind, interest which is collected by a banker in the process of their banking related activity, in the process of giving a loan or advance, then that is the interest which is received as a consideration which is exempt from my GST. So any interest earned from my deposit which is there with the bank, or bank which is deriving its return by way of interest. So any money, any interest which is connected with money given, money taken, that is the element which is exempt from GST. Now in this case, these are the elements which are connected with my supply of goods or services. So if goods or services taxable, tax rate of such goods or services is applied on interest or late fee or penalty, whatever you name you call. So whatever money I collect, the same is subject to GST if the goods or services are taxable. Let us take an example. Say goods are supplied on 18th of say May 2021 for a sum of rupees 5 lakh. GST, I'll say value, transaction value. TV is your transaction value. Tax, say the rate of 12%. On this 12%. Total 5,60,000. Now, the terms and conditions is that within 7 days, payment has to be made. But customer defaulted. And paid say penalty at the rate of rupees 25,000. Just a hypothetical example. For this value of 5,60,000, customer has defaulted and he has paid 25,000. Now what happens here? If that money has been received as additional consideration along with 5,60,000, this 25,000 I received. So what happens here? My transaction value will be 5 lakh plus 25,000. So on that, I apply GST at the rate of 12%, and this is how it becomes. So here, the gap between my original tax and this 3,000 is a GST on a sum of rupees 25,000. So I as a supplier have to charge GST on that particular sum called default, that is interest, late fee, penalty, by whatever name you call, which is for delayed payment of my consideration. Because there is a delayed payment of receipt of consideration, this money is also subjected to GST examination. This is what you can expect from your testing point of view. Let me come back to my presentation. Let me see if there are any questions so far. LD is your liquidated damages, Venkat. Venkat, this particular Excel file, we will put it onto the ICAI website. You can have a download at a later point in time. This is, definitely we will share to ICAI for the purpose of benefit of students to download and use it at a later point in time. There's a question from Janaki. If you are buying anything from Amazon or Flipkart, they charge delivery charges. Will it also be included in transaction value? Answer is yes, because it is incidental expenses for the supply. We have to consider GST on that delivery charges also, Janaki. Answer is yes, we have to charge GST on that. Moving further, the last leg of inclusion. Subsidy is directly linked to the price, excluding the subsidy from the central government or state government. Now, examination, this is one aspect where you can expect a question from the purpose of valuation. Section 15, subsection 2, clause E. Now, this particular clause E talks about your subsidy. Say there's a company, there is a book house who sell academic books. You can see that this along with academic books, there are other what you call working note and other books of general knowledge. Now, there is a seller called ABC Book House. There's a company called XYZ Private Limited. There's a company called XYZ Private Limited. It says that books sold to government school, part of CSR, give a subsidy of ₹20 each. So they say, this particular XYZ Private Limited says that, look, whatever books you are selling, you give a subsidy of ₹20 every book. That means to say, if there are books, if the selling price is ₹150, subsidy, they will say 20 net price. Now, the book house collects a sum of ₹130. The book house collects a sum of ₹130 from this particular customer, whoever the student wants to buy. Now, this particular section says that, look, the 20 was given as a subsidy that also forms part of my transaction value. By virtue of this particular clause, this 150 shall be the transaction value. 130 not to be considered as TV. Now, exception to this rule, subsidy given by state or central government. This alone is kept away from the purpose of levy of my value of GST. Moving further. Now, section 15, subsection 2, what value I have to include? First, it talks about taxes. You remember that example of passenger transportation. My road permit tax, your what you call green energy tax, whatever taxes I pay, if charged, that should be included. That is your first clause. Second clause, I gave example of a trust. Any activity done by the recipient on behalf of the service supplier, that also has to be included. Third example, I gave example of this laptop, transportation and your packing charges, cash on delivery. Incidental or ancillary expenses shall also form part of my transaction value. Fourth element, I gave example of this the penalty of 25,000. So interest, late fee, penalty, whatever you charge, that also forms part of my transaction value. The final fifth element called subsidy. I gave example of this corporate book house, where money given as a subsidy by a private limited company, part of their CSR activity. All these 5 elements was explained in subsection 2, saying that you have to form part of your supply value. Hope you are clear till now. Now, just to summarize what we have discussed, we have to include your taxes, duties. We have to include your expenses incurred by the recipient. We have to include your incidental expenses. I gave example of this laptop. We have to include this late fee or interest forming part of consideration. Finally, subsidy is what we have discussed, excluding state government, central government. When I was giving example of subsidy, always remember this Indira canteen, where this Congress government, wherever the Congress is ruling party, in that particular state, when there is an Indira canteen which is being operated, any money received by the state government by way of a subsidy, that shall be excluded from the purpose of value of supply. Now, before I go further, I was talking about all what I have to include. Now the question comes here. If you recollect my first slide of first example, as a chartered accountant, sir, I do some ROC filing. I recover 300 rupees from my client. So should I include that? Is that an incidental expense? If I ask the same example now, we have discussed this particular slide. Now our question comes to you. Sir, I am a chartered accountant. As a part of professional fee, I charge that 300 rupees to my client. Should I need to call that 5,300 as a transaction value? What would be your answer? For that, I draw attention to this rule 33, which talks about the concept called pure agent. A concept called pure agent. Students, just give me a minute. Of pure agent, this aspect of pure agent is something which we need to keep in mind, connected with the valuation. When we talk about this value of supply, pure agent says that any expenses which I have incurred as a pure agent, this does not form part of my value. I'll explain this pure agent this way. The term pure agent means a person who enters into a contract for what? With the recipient, for what? Look, I'm going to act as a pure agent for what? I incur an expense. I incur some cost in the course of my supply. Now, when we read this clause A, take example of this chartered accountant service. As a chartered accountant, I tell to the client, look, I'm going to file your ROC documentation. I am going to spend some money. You are going to pay me back. Now, I am telling that as per the contract. Now, contract can be written verbal. So, as per the contract, I am going to incur expenditure or a cost. How? In the course of my supply. Further, I, as a pure agent, neither intend nor hold title to that goods or services. I repeat, whatever services I incur, whatever services I receive, I doesn't have an intention to hold the title to those goods or services. Now, when I talk about this example, please correlate with that particular passenger transportation service. I was talking about the employee passenger transportation, where the service provider is incurring something called toll charges, is incurring something called permit tax, state permit tax. When the state permit tax is given, the tax is given to the owner of the vehicle. It is not given to the private limited company or a corporate client. Now, in case of ROC, when I remit this ROC fee, in the challan you can see XYZ Private Limited, remitted by Praveen. Now, I am not holding the title. It is not for me. It is on behalf of XYZ Private Limited. So, this is the second clause. Third clause. The pure agent does not use for his own interest such goods or services procured. This particular service or a service which is received, he does not use it for his own interest. So whatever cost I have incurred, that is not for my personal interest. It is not for my gain. It is for the recipient per se. And the last element, the pure agent receives only the actual amount incurred to procure such goods or services. The four conditions if I have satisfied, then I would be called as a pure agent. First, I need to have a contract for what? To incur that money. Second, I don't have an intent to hold the title to those goods. Third, I don't use the services for my personal use. Once I receive, it is not for my personal use. Fourth, I claim back as a reimbursement of actual amount I have spent. Now, going back to your example number 1, I was talking about a chartered accountant who filed ROC fee. 5,000 is your professional fee. 300 is your fees paid to ROC, your Minister of Corporate Affairs. Now, if you put all these conditions, sir, I discussed with the client that I'm going to incur some expense. I have said that this particular service, I don't want to hold a title. The challan clearly says XYZ Private Limited. Third, this challan, I don't have any benefit accrued to me. Once I pay this ROC fee, the benefit flows back to the recipient. Fourth, when I raise a bill, 5,000 professional fee less, I would say ROC fee paid rupees 300. So I attach a challan saying that, look, I spent 300, I got back 300. This is the condition to call myself as a pure agent. So what they say, the expenses or costs incurred by a supplier, if I act as a pure agent on behalf of the recipient, it shall exclude from the value of supply. Now the answer to that first question, I would say that if I act as a pure agent, then that money what I've spent shall exclude from the value of supply if all these conditions are satisfied. First, supplier acts as a pure agent of the recipient when he makes the payment to a third party. So the third party, in case of MCA, they know that this money is being received from XYZ Private Limited. The payment is made by a pure agent on behalf of the recipient, where it has been separately indicated in the invoice. So when I raise an invoice to my client, I say 5,000 is professional fee, 300 is your ROC fee paid. The supplies procured by the pure agent from third party or as a pure agent are addition to the supply of services. So 5,000 is my charge. In addition to that, 300 is my reimbursement, right? So when all these three conditions are satisfied, then I keep that away from a particular value of supply. Let me just halt here to see if there are any questions so far on this value of supply and pure agent. Janaki has a question with respect to this subsidy given. What she is asking, sir, in this example, what you have given, ABC book house will pay tax on rupees 150 and collect only 130. Now, Janaki has a fantastic question. What she says is, when the book house is selling the book, instead of receiving 150, they receive only 130. 20 rupees are not receiving from the student. But please keep in mind, Janaki, that 20 rupees is paid by the private limited company. So they say, look, I'm paying you 5 lakhs. Whatever expenses you have incurred, I'll pay you back. So that 20 rupees is not paid by the student, rather it is paid by the private limited company. Accordingly, they need to pay tax to government on 150 rupees. So that is the answer to your question. Next question. Can you explain the taxes, duties, etc. if reimbursed or debit note issued? Definitely. I'll come back to my Excel file. Yeah. You can see the Excel file. Hope you can see the Excel file, Janik. See, for a moment, let us assume that service provider and recipient. Service provider ABC Tour and Travel. Recipient XYZ Service Private Limited. Now, contract value for passenger employee transportation 3,25,000. Interstate permit say 35,000 or 85,000. Toll charges say rupees 1,850. So if I take this way, my value of supply shall be 3 lakh. Okay, let me just take 10. Yeah, my value of supply shall be 4,11,850. In ideal course of business, in normal course of business, when we talk about these taxes and duties, any money which you have paid as tax, when you have charged your service recipient, that shall form part of my transaction value. So here my monthly commitment fee of 3,25,000 plus part of the contract. This particular service provider has a contract saying that, look, you as a recipient have to pay me back the taxes which I have paid for the purpose of transportation. This particular ABC Tours and Travels says, look, I have gone to Delhi to pick the employees of your company. I have my permit in the state of Haryana. For the purpose of your employee, I traveled all the way from Haryana to Delhi to pick up them and again to drop them back. So I have incurred expense by way of your interstate transport permit. Interstate transport permit. So this particular amount was paid to the Delhi government. So when this service provider pays 85,000 to the Delhi government, this being charged forms part of my value of supply. The question comes here. So what if debit note raised instead of mentioning in a tax invoice? Question is valid. People try to find a ways to get away from the taxation. I would say money recovered in relation to supply. I have charged on the face of invoice or I have shown separately, definitely forms part of my supply value. Why? Section 15, subsection 2, clause A talks about that. Refer to page number 7.8. This is the answer to your question, Janik. Let me go back to the questions. Next, there is a question from Namita. Domino's deliver pizza in 40 minutes. As it is delayed by 10 minutes, so it's free. Well, government charge no tax on it. Fantastic example. Look at it this way, Namita. Customer has got this COD, cash on delivery. I have to deliver a pizza which is worth 1,000, saying that within 30 minutes I have to deliver. Now, once I deliver, did I receive any money, any consideration? Consideration in money or otherwise? Come to your institute material. Come to institute material 7.3. Any payment made or to be made. Page number 7.3. Consideration means any payment made or to be made. Was the payment made, Namita? There was no payment made. Was this payment to be made? I don't even pay in future because out of obligation, there is no consideration. When there is no consideration, there is no money received. So when there is no money received, what is the value of the transaction? Value of transaction is 0, right? So there is no need to pay tax on that particular supply of pizza where money was not received. Further, there is one question from Venkat. Examples of expenses incurred by the receiver. Venkat, I gave example of this Pandal Shamiana, where if you happen to see this trust, in case of trust where food was spent, that was an example in relation to expenses incurred by the recipient. Trust has spent 50,000, like trust receives donations. So what does the trust say? Let me come back to the trust example. Yeah. See, I was talking about this example, Venkat. Now, when we talk about trust, they receive various donations. So this ABC Trust goes to XYZ Private Limited and says, boss, I received 50,000 from one of my trustee or one of my particular person as a donation. That 50,000, what I will do, I'll ask that particular donor to pay directly to the caterer who supplied food to you on your behalf. Now here, expenses incurred by ABC Trust on behalf of XYZ Private Limited. Now this 1.85 lakh is an obligation of XYZ Private Limited to pay to the caterer. That obligation was paid by ABC Trust by way of donation. A donor who is willing to pay 50,000 for food was directly routed through this way. Now that is an example of money spent by way of your expenses incurred by the recipient. Moving further, Padmanabhan says, is there not pure agent concept in relation to supply of goods or provider of services? Is there not pure agent concept in relation to supply? Padmanabhan, if you happen to connect with my first example with respect to this ROC filing fee, 5,000 was recovered. That is an example in relation to supply of goods or services where a pure agent concept comes into picture. That is how we have to read together. Next, moving on further, Namita says supplier is charging 10% interest on television if paid late. Rupees 500 contains subsidy of rupees 60 given by ABC Trust. Fantastic. Namita is clubbing two aspects together. Now, see, theoretically question is good. Practically, I don't think it will happen. What Namita says, I go to a shop to buy a television. Now it is on a credit basis. If I fail to make the payment within a given credit period, shop person charges 500 rupees as a late fee. Now there is a trust which is coming and protecting the weaker segment, saying that, Papa, you are not having enough money. I'll give you 60,000 as a subsidy. Who is giving? Trust is coming forward to give a subsidy of 60 rupees. Now, if I club both together, Namita, if I club both together, though there is 60 rupees which is given as a 60 rupees given as your donation, my value of supply shall be 500 rupees. Why? This subsidy is not given by state government or central government. So that is the answer to your question. Coming back to my pure agent concept. Okay, so this example, what you see on this slide is connected with my first example where 5,000 is charged as professional fee, 300 rupees is charged as your ROC fee. So I, as a supplier, I'll say find 5,000 on which GST is applicable. 300 is meeting the test of pure agent. I'll say professional fee rupees 5,000. Reimbursement as pure agent within brackets ROC fee paid 300 rupees. Value of supply as per section 15. I'll say 5,000 on which I'll charge appropriate GST. This is my exclusion of pure agent in relation to inclusion under subsection 2. Moving further, now all along we are talking what is the transaction value, what all elements I have to add into supply value. When I talk about adding, there are 5 sutras under subsection 2. Now subsection 3 says all along you have been talking, let me exclude something. What is that? Value does not include any discount before or at the time of supply if such discount has been duly recorded on the invoice. And natural and very simple and straightforward. On the face of the tax invoice, if I give some discount, which is called as a trade discount, So if I sell, say for example, if I have to sell a pair of shoes, the pair of shoes is worth 1,800. On that particular day, there is an offer of 10% on the face of invoice. Pair of shoes, size 10, 1,800, less 10% discount, 180. The rest is the net taxable value. Section 15 says, on the face of invoice, whatever discount you have given, that shall be excluded from value of supply. A simple, straightforward for us to understand. Now, clause B is something which comes further to say. Clause B says that after the supply has taken place, a discount which is established in terms of an agreement, and this particular agreement is entered before or at the time of supply, then that also shall be excluded from your value of supply. Second condition is ITC should have been reversed. Let me come to Excel file to explain this concept clearly with respect to clause B. Section 15, subsection 3, in that clause B talks about your discount. And this discount affected at a later point. This discount is affected at a later point. Let me give an example to make you understand in a better fashion. Say there is a supplier and there is a dealer. Supplier, let's take example of ITC. Dealer, ABC and Co. Supplier comes with a scheme, monthly scheme, over and above 10,000 numbers, discount of 10%. Now, what this particular agreement says, there is a contract or agreement, and this contract or agreement duly communicated before or at the time of supply. Means the supplier communicates to the dealer. What does he communicate? Look, in case you happen to purchase from me a quantity over and about 10,000 pieces in a month, I'll give you a discount of 10%. Now, beginning of the month, ITC would not know whether dealer will buy 10,000 pieces or 8,000 pieces. So at the end of the month, if his overall cumulative purchases in that month exceeds 10,000, he is entitled for 10% discount. Now let us take example. Say April 2021. Just give me a minute. April 2021, purchases are like this. So 1st April 2021, 10th April 2021, 15th April 2021, 25th April 2021, and 30th April 2021. Now, so I'll say quantity value 1,500 pieces 1800 pieces, 600 pieces, 900 pieces, and 1200 pieces. Okay, let me put it this way. Value, so per piece 100 rupees. Let me take a hypothetical example. Now, this I call as scenario 1, dealer A. Now, the value of purchases made by this dealer is 6 lakhs. How many pieces he has purchased? 6,000 quantity he has purchased. For getting an entitlement, minimum 10,000 purchases should be there. So this dealer A will not get any discount. No discount entitled to Mr. A. The same let me put for another dealer. I call scenario 2 dealer B. Say 1800 pieces, 2000 pieces, 2500 pieces, 3900 pieces, and say 4000 pieces. Now, Mr. B has exceeded 10,000. So in this case, what will happen? In the month of, like once April gets over, we examine and say discount at the rate of 10%. So what is the entitlement? On this 10% is what he gets an entitlement for. Now the question comes here. See, assuming the rate of tax is 18%. And for a moment, let's presume that this is your IGST transaction. On 6 lakhs, the dealer, this ITC would collect 1,08,000 as GST. ITC collects from dealer A 1,08,000 rupees on this supply. Similarly, on this particular supply to Mr. B, there is a tax of 18% for a tune of 2,01,600. So here what happens, in the month of May 2021, credit note issued. Why? This dealer B makes a cash payment to this particular ITC only to the tune of 10,08,000. The question what Janaki asked a while ago. Sir, in case of a book house, when I sell book for 150, I get only 130. Why should I pay tax on 150? Similarly, in this case of dealer B, ITC, though they have made a sales of 11,20,000, they get a cash inflow. I would say this is a cash inflow. How much they have received? Only 10,08,000. On 10,08,000, 18% happens to be 1,81,440. Now, this is a cash flow issue. Now, this is the point where you as a professional chartered accountant will start thinking once you get into a corporate world, cash flow issues. How do we reduce this exposure? Now, what happens? In the month of April, ITC has to pay 2,01,600 to government, but actually Mr. B will pay 10,08,000 on that GST of 1,81,000, 11,89,000. Why so? Sir, I am entitled for a discount of 1,12,000. On that, I am saving 18% cash outflow. So 20,000 is a saving. 20,000 is a saving to this particular Mr. B, right? So this concept of credit note, the valuation, it says that I permit you to reduce your value of supply. How? When? If there is a agreement, contract or agreement before or at the time of supply. Then only section 15 subsection 3 allows me to issue a credit note for reducing the value of supply. So if I reduce the value of supply, what happens to the GST? So the question comes here, if you read your page number 7.9, refer to Institute Material page number 7.9, subsection 3, Clause B, point 2. Input tax credit attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient. So here the condition is input tax has been reversed by the recipient. Now, government, see, ITC has paid 2 lakhs. Subsequently, they are reducing 20,000. The government is getting short tax to the extent of 20,000. The condition under section 15 is, look, you have to prove that your customer has reversed the ITC if he has taken to the extent of 20,000. This is what discussed in your subsection 3 when it talks about your exclusion. Let me see if there are any questions on this discussion so far. So far, so good. No questions. Namita, this B clause, I'm not getting this clear, ma. Connected to which slide or which thing, you let me know so that I can elaborate it. Coming back, let me go back to the presentation. Value of supply, subsection 3 in detail we have discussed. Now we will move on to subsection 4. Value of supply cannot be determined under subsection 1. Then as may be prescribed. Now we will travel to the rules, chapter 4 of Cgst rules. I draw your attention here. The value of supply, my transaction value under section 1 fails. Why it is failed? Sir, it is between a related party transaction or money is not the whole consideration. Then when subsection fails, I go to the rules. How do we apply this particular valuation rule? Further, as I said, ancillary provision, notwithstanding anything contained in subsection 1 to 4, government on the recommendations of the council, may notify few supplies for which what is the value. So the government has restricted its rights by way of a recommendation from the council, where some of the transactions they identify and say, for these transactions, this is the value of supply. This is given in my subsection 5. So from here, now we move on to our valuation rules. Before we start with this, we are at 7:50. I'll give you a break of 5 minutes. Let us resume back at 7:55, right? Let's have a break of 5 minutes. Can we go live? Yeah. Can we go live? Students, welcome back. Now, having understood section 15, which talks about your value, from there we go on to the valuation rules, where right from rule 27 till rule 35, some rules have been formulated for us to understand, for us to examine how a particular issue can be addressed when there is a failure to understand the transaction value. To understand when there is a failure of transaction value. Now, this particular rule, we will go one by one to understand different scenarios, how the government has used their powers to notify what should be the value on which the GST has to be paid. Now, first and foremost, Tejo, you have been asking your offer. You have been asking where there is an exchange. So, answer to your question comes here in this particular slide, Tejo. My valuation first rule, rule 27 talks about where, I'll give an example, then we will come to the rule itself. Assuming for a minute, there is a mixie grinder which has been exchanged for rupees 3,500, where the old grinder, mixie grinder was given for 3,500 and the new one was purchased for 20,000. So when I go to this particular shop, generally, if you see this electronic gadgets like a refrigerator, television, watch, radio. Now, radio these days no one is watching, no one is using. 10 years back, 15 years back, 15 years back, television, not 15, 20 years back, it is a luxury, right? So if I take the old item and I say, sir, for purchasing a new TV, please exchange my old TV. The brand new TV is 50,000. I give my old TV for 5,000, right? Now, if this is the case where I don't receive money in upfront, rather there is some value which is exchanged, or a battery, like your a two-wheeler, three-wheeler, or four-wheeler. I have old used battery. If I have to buy a new battery, they exchange for a value on the basis of the condition. So there, my rule 27 comes into rescue to guide me how to determine my transaction value. So here they say, in case if the consideration is not wholly in money, my consideration is not wholly in money, then the value shall be the open market value. What it says, in case of a consideration which is not wholly in money, it says the transaction value shall be open market value. So how do I get my open market value? Example, a television. So I go to electronic shop, I ask for Sony brand with this particular size, the value. They say 50,000. So a price which is available is called open market value. That is your open market value. If the value is not available, the money what I paid in consideration and a further amount equivalent to that which has been exchanged as a consideration. Like example, we were talking about that TV. The value of television is 50,000. I don't receive entire 50,000. I receive 45,000 as cash. In exchange, I receive old TV for a sum of rupees 5,000. So if we receive that, where if the open market value is not available, my consideration will be the total money received in consideration and further amount equivalent to that consideration. Like the exchange is 5,000. Now, if you happen to see these television shops and all, they give an invoice, value of television, rupees 50,000, less exchange value, rupees 5,000, net value, rupees 45,000, GST applicable. On 50,000, they used to charge 18%. Now, this is how they show where my open market value, that means I don't receive 50,000 upfront. So on the face of the invoice, I show the exchange. Since I exchanged for 5,000, that shall be my transaction value. So Tejo, your question where you are talking about exchange, I exchange something for something, then this rule 27 comes into picture. So what if on the invoice I don't show, like it's there in our what I can say, our route, that whenever there is a transaction to be presented in a particular fashion, we always tend to think in a different fashion. So what if I don't quote on the invoice? Now this is there in our DNA. Majority of the humans have this DNA. You say that it should be shown on invoice. What if I don't show? Now there, some other documentary evidence you give to give a credit of that 5,000. Yes or no? To give a credit, that old mixie grinder or old TV, what you have received, you would have given some document saying that this I have exchanged for 5,000. So that is a documentary evidence where the value received, the value in exchange, these two put together shall be my value, transaction value. So what if this exchange value is not available? What if that open market value is not available? So go for like, kind or quality. So if I have this Samsung TV which has got all the features equivalent to Sony, so I'll take the open market value of Samsung TV. That is your like, kind and quality, where I fail to derive the value of that money in kind. I don't know what is the equivalent money other than money. I received cash of 45,000. Balance how much I have received, I don't have evidence. Then, since there is no open market value, I'll go with like, kind and quality. Instead of comparing with Sony, I'll go for equivalent Samsung. So all these conditions fail. I don't have Samsung, I don't have BPL, I don't have any other brand. Sony is the only brand. Then they say, don't worry. There's an ancillary rule called Rule 30, which derives its roots from your CAS 4, Cost Accounting Standard 4, where 110% of the cost of goods manufactured or 110% of the value procured, that shall be your transaction value. So please make a note. Rule 30 refers to 110% of manufacture cost or 110% of procurement cost. Now, if it is a service, 110% of the value in service. So I derive on this basis my transaction value. So please remember, whenever I talk about this Rule 27, the open market value I refer. So if I don't have, then the value of that consideration plus the value of exchange. This is what we need to keep in mind. Now, this is picked up from our institute material. Very easy way they have summarized for us to understand how we recollect this particular Rule 27, where there is an unrelated party transaction, where my monetary value is not open market value, where I receive money in monetary consideration. This is one particular slide I have taken from our institute material. Page number 7.38. Page number 7.38. So this is summarized saying that look at your open market value. So not there. Money, monetary consideration plus money value of consideration. So these two also not there. Go for like, kind or quality. So this is also not there. Then apply your Rule 30, where 100% of cost of procurement or manufacture. This is my answer to Rule 27. Tejo, hope you have got your point cleared, ma? There was one example which is picked up in this regard. Say a new phone is supplied for 20,000 rupees. If someone wants to buy a telephone mobile, the cost of the phone is 20,000. So there was an exchange of old phone where the old phone was getting a price of rupees 4,000. If I get an old phone, I'm going to sell for 20,000. If I get an old phone, 4,000 is the value for old phone. In addition, cash is being received for 20,000. So when I apply Rule 27, 4,000 in kind, that is your equivalent value, plus 20,000. Put together, 24,000 is my open market value. Next. So we have understood your exchange. What if there is a related party transaction? Before I go to my related party transaction, let me quickly see if there are further questions. Namita has a question. Domino's deliver pizza that we have discussed. There is one more question. A customer incurred rupees 1 lakh, which supplier need to incur. Transaction value is 5 lakh. X delay payment, interest 10% charge on 5 lakh or 4 lakh. Okay. Now, what is the value on behalf of the supplier the customer has incurred? If supplier has to pay 5 lakhs to the main supplier, 5 lakh was incurred by the recipient. On 5 lakh, the 10% will be applicable, Namita. 15.3b clause 2 point is left. 15.3 in clause B point 2 is left. That is what we have discussed with respect to 15.3 where ITC reversal has to be done. Namita says that 15.3 input tax. Namita, we had discussed, I think you lost this connectivity. Let me come back to my Excel file. Look at here. Input tax credit as is attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient of supply. I have written here, ITC has been reversed by the recipient. This point we had a discussion. Again, I'll repeat for the benefit of doubt. This discount when ITC is exchanging. Now, government gets 2,01,000 minus 20,000, only 1,81,000. When government is getting 1,81,000, government wants to ensure that this supplier dealer B, this customer dealer B has reversed the input tax credit of 20,000. This is the point which was discussed in your subsection 3 clause B point number 2. Hope this is clear now. Let me come back to my presentation. Rule 28. Now when I talk about this rule 28, this is connected with my first leg, that is your transaction value, not between a transaction value between a related party transaction. A transaction value between a related party transaction. That means seller, buyer. Both of these parties are having a relationship. So how are they related? How are they related? Remember the 3 rules. One is blood relation. Second is your artificial judicial relation. Third is by way of exercising a control. Any of these three parameters, I have my related party transaction comes into picture. So when there is a related party transaction, my rule 28 comes into picture. Why? Transaction value is not the only value. Transaction value is not the value acceptable as per section 15. Now, moving further. When supply is between two people, two parties, who are distinct people, distinct persons, which is other than agent. Distinct persons, you would have read section 25 or you would have read schedule number 1. As per schedule number 1, supplier and recipient are having same PAN number. Distinct persons having same PAN number. If both supplier and recipient are having same PAN, one in one state, another is another state, supply between one state to another state without a consideration, schedule 1 clause 2. That means supply of goods or services between two distinct persons who are having same PAN, there my related party transaction comes into picture. Now, why is this so important? I'll just give you an example this way. I'm talking about rule 28, where there is a related party transaction other than agent. Principal agent, also a related party transaction where there is a control. So rule 28, other than agent, they have brought in picture. Let's understand this example this way. So there is an entity called ABC Private Limited. This entity has got registration at Maharashtra, Tamil Nadu, then Kerala, and say Uttar Pradesh. Maharashtra is a manufacturing plant. Tamil Nadu is a distribution or sale point. Kerala, let's say it's again a manufacturing point. UP, let us assume it's a distribution point. Now, goods are manufactured, say for rupees 1,50,000. Goods are manufactured for rupees 1,50,000. And sold from the distribution point for 1,85,000. Kerala, again 1,50,000. Distribution point 1,85,000. Now what happens here? When GST is charged, Maharashtra, from Maharashtra, when GST is charged, for a moment, this is my transaction value, GST at the rate of 12%. GST at the rate of 12%. Now, keep this cardinal principle, destination-based taxation. Now, from Tamil Nadu, when the sale is happening, 22,000 rupees is the value of tax. Assuming for a moment, this is a intra-state. Also, assuming for a moment, just for hypothetical example, assuming that this is an intra-state supply, when Maharashtra is selling the goods, there is a tax of 22,000. So when Tamil Nadu depot is selling the goods, the same goods which are manufactured without any value addition, 22,200 is the taxes. But in the case of Maharashtra, 18,000 is the tax which is being paid. Is there a tax evasion? Is there a tax planning? If someone asks, there is a tax planning. Why? So this manufacturing was done in month 1. Sale is happening in month 3. Sale is happening in month 3. Now, isn't it there 18,000 paid in month 1 stuck for a period of 2 months for the want of sale? Yes or no? Answer is a big yes. Now, to protect this particular tax, that is your working capital issue, what if the manufacturer sells only for 15,000? Actual value of that is 1,85,000. Now, what is happening here? Saving of working capital. Now, actually, this is an unhealthy practice. Now, technically speaking, goods which are moved from Maharashtra to Tamil Nadu, which is having a distinct person, there is no revenue recognized. There was no sale to be recognized in the books of ABC Private Limited. When we look at this ABC Private Limited, this entity doesn't get any revenue. Only when the sale happens from distributor, that is sale point, I get a sale revenue for the purpose of my income. Now, this could be tax planning. To curb this practice, my Rule 28 has come into picture and say, just give me a minute. Yeah. So this particular Rule 28 comes into rescue, saying that in case of a related party transaction, I don't go with your transaction value. Then what you will do? They say, let it be the open market value. That means, what is the open market value? That shall be the value I'll take into consideration. If open market value is not available, the value of goods and services which is like kind or like quality. Like Samsung, Sony TV. If I get a Sony TV for 50,000, that's my open market value. Sir, if open market value is not available, why? It is a related party transaction and this is only available with them. Then like kind quality. So this is the only product available. There is no competitive. There is no alternative like kind or quality. Then what I have to do? Then they further say, go as per Rule 30 or Rule 31. Determine what is the cost you have incurred. On that basis, you derive this value. Now, test your open market value, test your like kind quality. If these two fail, go for your rule 30. That is on the basis of Cgst 4. So this all I have to do with respect to related party transaction. Now, the story doesn't end here. They say, what if the recipient is in a position to take the input tax credit, or if these goods are intended for further supply. If the goods are intended for further supply, then they say blindly adopt 90% of the value which is done at your subsequent point. So this particular provision says, first test for open market value. You get the result of failure. So it is not available. Second test, go for like kind and quality. So this is also result failure. Then third option, adopt rule 30 or 31. Rule 31, value as per generally accepted accounting principles. Value as per generally accepted accounting principles. Now, so either of this is not available, then they say in case if the goods are intended for further supply, then 90% of the supply value of for non-related party. That means to say, since the sale is happening from Tamil Nadu, they say if the sale from Tamil Nadu is not to a related party, whatever is the supply value on that 90%. So here, technically, 90% of this 1,85,000 shall be considered as a transaction value. On that, 12% should be the value. I repeat, in case if these goods are meant for further supply as it is from your other unit, other related party to unrelated party. That means from Tamil Nadu, this is a depot where sales happen. Sales happen to all unrelated party. So if the sale is happening from Tamil Nadu, so Maharashtra branch has to adopt 90% of the sale value of Tamil Nadu if it is available to unrelated party. All this they have said. Now, sir, all this is becoming so complicated. Why you want to complicate so much of things? Then they say very simple thing. If the recipient is in a position to avail ITC, transaction value is the open market value. That means to say, if Tamil Nadu is in a position, Tamil Nadu branch is in a position to avail input tax credit, then what Maharashtra has raised the invoice, that shall be considered as open market value. They cannot question. I repeat, examination, this will be tested. If the recipient, a distinct person in another state, is in a position to avail input tax credit. So why a position to avail input tax credit? We will test your section 17. We will test your section 16. So these goods which are manufactured by Maharashtra, if it is sold by Tamil Nadu and Tamil Nadu is in a branch is in a position to avail input tax credit from the sales of Maharashtra, then this 15,000 will not be questioned. I'll put this example this way. Transaction value, tax at the rate of 12%. Now, assuming for a minute this examination of ITC. Tamil Nadu is a distribution of sale point. Say, for an instance, let us assume that this entity called ABC Private Limited, this is manufacturing paints. This is manufacturing paint. The product which is manufactured is paint. Now, from Tamil Nadu, sale happens to, say, let us take example of ISRO. where goods are exempted. Goods are exempted. So, and from Tamil Nadu, the sale values say 2,05,000. GST nil. Why it is exempted? Now, look at here. The paint is manufactured in Maharashtra. The paint is manufactured in Maharashtra. From Maharashtra, the paint is manufactured. From Maharashtra, it is transferred to Tamil Nadu. So when Maharashtra is selling the paint to Tamil Nadu, 15,000 was considered, on which 1,800 GST was paid. Now the question comes here. Test ITC eligibility. For this paint which was purchased by Tamil Nadu from Maharashtra, because it is an exempted activity, Tamil Nadu unit cannot avail ITC. My Tamil Nadu unit cannot avail ITC. Because ITC is not available, my transaction value as per Rule 28 will be 90% of consideration from other location. So that means to say, here instead of 15,000, 2,05,000 into 90%. On that, 12% GST. This shall be transaction value. Was there a short payment in tax? Was there a short payment of taxes? Answer is a big yes. Instead of paying 22,000, he has paid 1,800. There is a short payment of taxes to the tune of 20,340. Examination. With respect to related party transaction, please expect this sort of questions where transaction is between related party and the related party that is a distinct person cannot avail input tax credit. So if the related party cannot avail input tax credit, I will go back to my presentation. The value shall be the value where goods are intended for further supply as such. Where goods are intended for further supply. How? As such means I don't change anything. I receive paint in a pack condition. The same paint I have sold to my customer. So if the goods are meant for sale as it is, the value shall, at the option of supplier, be 90% of the price charged. 90% of the price charged. So why do I go for 90%? Why shouldn't I go for Rule 30? So when I go to Rule 30, CAS 4 comes into picture. The value, the goods manufactured on that 110% will be the value. So if I come back to my example, now you all know cost of economy. How do you do your costing? So if I apply my rule, sorry, let me just clear these things. Yeah. If I apply this Rule 30 as per value as per Rule 30, assuming that this 2,05,000 2,05,000 is a manufacture cost. On that 110%, this will be your transaction value. Now 1,84,000 is at 90%. This 2,22,500 is you as per your 110% of cost of manufacture. So you decide, do you want to go with your Rule 30 or do you want to go with your 90% of the transaction value? Definitely the supplier will say, I'll go with 90% option. Now this comes into picture where the other unit is not in a position to avail input tax credit which was charged by your main location. So alternatively, if Tamil Nadu unit can avail ITC, that is supply is taxable, then rupees 15,000 shall be the transaction value. So here eligibility of ITC, availability of ITC is the test which they have put in. If the other unit is in a position to claim the input tax credit, then whatever you have given on the invoice, I'll go with that. The reason you bill to there, they again bill it to the other client. Definitely in the flow chain, the taxes are collected promptly. So between the related party, I don't want to put a hurdle with respect to taxes. So this is one big relief under Rule 28. This is proviso to Rule 28. This is proviso to Rule 28. Page number 7.38. Page number 7.38. Now, so this comes Rule 28. Let me come back to my presentation. In case of services, my Rule 32 says that, look, from one distinct person to another distinct person, if the services are to be rendered, and if the service recipient is in a position to claim the ITC, the value of service shall be nil. Now, this is a little complicated rule which was brought in. However, this rule was not notified as of today. I'll give you the backdrop of this particular rule. There is one hospital, Columbia Asia Hospital. In 2017, there was an advance ruling in case of this. There was a question asked in advance ruling. What? This Columbia Asia Hospital asked, sir, I'm having a head office in Bangalore. I have my branches in Andhra Pradesh, Tamil Nadu, Kerala. From Karnataka, I do salary processing for other branches. Means the employees who are working in other locations, I do the processing of salary. Second, I do the bookkeeping, I do the depreciation, I do the accounting, everything on behalf of other branches. Will this be considered as a service? As usual, Advanced Ruling Authority say, yes, you are a distinct person, the other location, Tamil Nadu, is a distinct person. Employee who is working in Tamil Nadu, employee who is working in Karnataka, employee who is working in Kerala, all of them are distinct persons, means employee of that state cannot be considered as employee of another state. Now, this is a little very grey interpretation brought in by the department. Considering that this Rule 32 was brought in, unfortunately, there was no life given to this Rule 32. What does this Rule 32 say? When we are talking about related party transaction, goods, we have discussed an example. Services, from one branch to another branch, if you render a service and this branch is in a position to claim ITC, then the transaction value, no, without consideration, then the value of taxable service will be nil. Why? Because ITC is available. Let me not burden, let me not complicate things. There is n number of services which will be rendered. For that reason, they brought in this Rule 32. Unfortunately, this was not invoked as of today. Let's come to Rule 29 in case of an agent. Prior to this thing, let me just see if there are any questions so far. Janaki has a question. Oh, no. Namita has a question. Consideration is forbearance when pizza delivery late. See, okay. Namita has this question. Can this money not paid by the customer be called as a forbearance as consideration? Now, Namita, please look at this way, ma'am. Forbearance is nothing but an activity, tolerance. Now, tolerance, there is a, something like LD clause. Now, I was giving example of Infosys getting, like, again, this example is just a hypothetical example, not to do with the realistic thing. I'm just, for academic purpose, I'm giving this example. So this software company has engaged one construction company. The software company gave a contract to the construction company to be completed within a span of 6 months. Unfortunately, within 6 months, it was not completed. So this software company has to pay, say, 5 crores to this construction company. They say, I have tolerated your imperformance. I apply LD clause. I am tolerating your delay, where 10% is your LD clause. That means instead of me paying, the software company paying 5 crore, they pay 4 crore, 50 lakhs. The 50 lakhs which was retained by way of a LD, that is your consideration. That will be considered for levy under Schedule 2, not in relation to PISA. PISA, where is that money? Like, instead of paying 10,000, I have paid, instead of paying 1,000, if I paid 950 rupees, the 50 rupees will be a consideration. Assuming for a minute, Namita, you are a private limited company and Domino's is a delivery. Now you have to pay 1,000 rupees to Domino's. Instead of paying 1,000 rupees, you have deducted 50 rupees and just paid 950 rupees. That 50 will be a consideration, applying your forbearance. That is how we need to understand. Janaki has one more question. ABC Limited supply to its subsidiary XYZ goods worth 50 lakhs. Okay, which further sells to distributors for 65 lakhs. Open market value is 55 lakhs. Which shall be taken into consideration? If open market value is there, 55 lakhs will be taken into consideration. If open market value is not there, then I'll go for like, kind and quality. If that is also failure, then I'll go for Rule 30. Clear? And now this option, that 65 lakhs what you have mentioned, Janaki, it's an option available to the supplier. Supplier can choose open market value or like, kind or quality. If these two are not available, Rule 30. Any of these three or 90% of the supply made by the other related party to an unrelated party. So this 65 lakhs comes into picture, which is an option given. If you recollect my example of Excel file, let me come back to my Excel file. See here, Rule 30 has got 2,25,000. My Rule 30 has got 2,25,000. A choice was given to me to adopt either 1,84,000 or 2,25,000. So as a professional, we take a call, we take a look. Is it easy to adopt Rule 30? Is it easy to convince the officer for Rule 30? Or is it easy for me to convince that 1,84,000? Whichever is easier, I go for that for the purpose of payment of taxes. What if the recipient is in a position to claim ITC? There is no question, there is no test of this value. Whatever value I mentioned, that will be deemed to be a transaction value. This is what we need to understand from Rule 28. Coming back, Rule 29, agent. Now, agent, principal agent, this is again straightforward equation which is derived from my Rule 28. First and foremost, receipt. In case of a principal agent, because there is a related party transaction, principal is in a position to induce agent, or agent is in a position to command or control the principal. The transaction value shall be open market value, or at the option of the supplier, 90% of the price charged for the supply of goods or like, kind or quality by the recipient to his customer, not being a related person. So they say, if there is an open market value, I'll go with open market value, or I'll take a choice of 90% of the price charged by my agent to the customer. I'll just come back to my Excel to explain this in a very simple form. Rule 29. Transaction between principal and agent. Now here, principal and agent, option 1, open market value, or 90% of the subsequent supply value to unrelated party. Now I'll give an example this way. A1 is an agent, A2 is an agent, D1 is a dealer. Sorry, let me say P1. P1 is a principal. P2 is another principal. Now, they are into supply of, say, cashew nuts, cashew. D1 is a dealer and B1 is a buyer. Now, in this particular case, please understand, principal and dealer, these two parties are related party. Similarly, dealer and buyer, unrelated party. Dealer and buyer are unrelated party. Dealer has a choice to buy from principal 1 or to buy from principal 2, right? Now, let us assume for a moment price of P1 to D1, price of P2 to D1. Say 5,000 is the selling price, 4,800 is the selling price. Now, this D1, price of D1 to B1 means the dealer, he sells to the buyer. Say he is selling with a markup of say 5,800. Now, this dealer has a choice to buy from principal 1 or has a choice to buy from principal 2. The same product, though there is a price variation depending on the stock availability, depending on the various terms and conditions. Like example, this if you look at this price variance, so why is that there is a variance? Principal 2 gives 7 days credit period. Principal 1 gives 30 days credit period. Principal 2 gives a free delivery at doorstep. Principal 2, I have to go and buy. Principal 1, he gives a free delivery at my doorstep. Various business equations where dealer 1 has to buy from either principal 1 or principal 2. But whatever product he purchases, he sells to customer at 5,800. Now, applying your rule 29, open market value. Now, whatever price P1 is selling, I am not accepting. So, the similar product, if is sold by principal 2, my open market value shall be 4,800. My open market value shall be 4,800. Everyone, please pay attention to this. Open market value is 4,800. Why? The same product, what principal 1 is selling, is available in the market by a competitor for 4,800. This is choice 1. Choice 2. Instead of that, there is a choice that whatever the price the dealer is selling to an unrelated party, on that 90%. So you have a choice either of these two. Now, definitely you as a professional has to take a call. 18% or 28% or 12, whichever be the rate of tax, I choose based on the requirement of my working capital requirement. This is discussed in my rule 29. Any questions? Just let me see so far. Okay. Janaki says that there is a question in December 21. Okay. Recent examination with respect to value of supply between distinct person and related person, and also agent. Good. So hope you are clear with Rule 29. Let's move on to Rule 30. This again, I have, with respect to Rule 29, very neatly explained in our institute material. Whatever is open market value, you pick that. If not, 90% of the supply value. So if these two are like open market value is not there, I'll go for Rule 30. If not, I'll go for Rule 31, which is your best judgment mechanism. Now, all along I have been talking Rule 30, Rule 30, Rule 30. What is there in Rule 30? Rule 30 is nothing but it's very simple. It follows the principle of my CAS 4. The value of a supply of goods and services above, which is not determinable, where there is no open market value, shall be 110%. Shall be 110% of what? Cost of production. If the cost of production is there, 110%. Cost of production or manufacture, or cost of acquisition. Sir, I have purchased this, I didn't manufacture. Then cost of acquisition or cost of provision of services. Either of these three shall be on that. 110% will be the value of supply. Right? So if I don't have open market value, if I don't have a value of like in a similar kind, then I'll come to Rule 30. Next. Rule 31. Now this is a residual rule where not every case you can go with your 100%. So in simple to say, you adopt a valuation mechanism which is in synchronization with your generally accepted accounting principles, and also all the provisions of section 15 where subsection 1, 2, 3, 4, all these conditions are duly validated. I accept your Rule 31. So this Rule 31 is a general rule where depending on the nature of business, where there is a complexity, like example, Ranbaxy, where a drug has to be, there is a drug which needs to be, which has been developed by way of research and development. This drug which has been sold to a related party. Now how do I do this valuation? My cost of goods sold cannot be applied straight away because manufacturing is not the activity alone. I have research, I have samples, I have a few items where there is a scrap generated, various activities are there. Then I don't adopt Rule 30, I come into Rule 31, I apply my principles of generally accepted accounting principles, and then keep this section 15 in mind for determining the value. Now, next is your Rule 31A. Expect a question from Rule 31A in the coming examination, that is your May 22 or November 22. For the reason, there is one Karnataka High Court judgment in case of this betting, gambling, etc., where the Karnataka High Court has actually set aside saying that this activity of betting, gambling is not an actionable thing, where this levy itself is not a proper thing. So this particular Rule 31A actually talks about your lottery, betting, gambling, or horse race, where they have said that in case of your lottery, straight away, whatever is the face value of lottery or the value which is fixed by the respective state government, that multiplied by 100 by 128. Why is that 100 by 128? Inclusive of taxes. This formula, if you see, numerator 100, denominator 128. My denominator 128 includes 100 basic value, 28% rate of tax. If it left together, that is my denominator. So whatever is the value of that lottery ticket or the price which is decided by the respective state government, this, if I multiply by 100 by 120, I'll get the value. This is in case of your lottery ticket. Next aspect, horse betting or gambling or a horse race. So you have this casino. This what I was referring to, this Karnataka High Court judgment. It was in relation to this race club Mysore Race Club in the case of Karnataka High Court, where they say this is not a actionable claim altogether. Now, whatever be the outcome of this judgment, as of now, it was not struck down. But expect a question from this actionable claim in for 2 marks in your forthcoming item. In case of a gambling, horse race, or a race club, there is something called totalizer. What is it? Oh, who is a totalizer? When there is a race, horse race, always there is a bet. Like you have 1, 2, 3, 4. You have punter. Punter is where you bet on a particular horse. You see the performance of that particular horse and this particular person who is driving. On the basis of their performance, you choose a punter and bet on that particular horse. How does it work? You put 100 rupees. If you win, you get 100 plus 100. You get 200 rupees back. If you lose, your entire 100 rupees is gone. That is how this horse races do function. Unfortunately, God forbidden, many people in the 5% of the time they win, 95% of the time they choose, or at times it's often 1% they could have won, 99% times they would have lost. Now we see like wherever this race club etc. is there, this the small daily laborers, auto rickshaw driver or your truck driver or a person who is a daily labor, they have this hope. If I put 100 rupees, I may get back 100 rupees. There is some sort of basic entry fee. So there is a person called totalizer, a person who collects money and who manages this particular thing. So if I pay 100 rupees as this gambling, the value of supply they say is 100 rupees. Means this totalizer has to pay 18% of the money which was collected to the government. Look at the implication on this particular thing. Now, if he is collecting 10 lakh rupees, on 10 lakh rupees, 18% is the GST which he has to pay to the government. Now, this is the cost which is attached. So, nevertheless, for examination purpose, please understand that the face value of the bet or amount which is paid to the totalizer shall be the value. Next, I have next in queue is Rule 32. Rule 32. We have another 12 minutes. I'll cover in detail one by one. If required, we will have coverage in the next session. This Rule 32 valuation has got 5 transactions where it is not possible or it is a painful activity to levy GST considering the nature of business. So they have given a formula, they have given a mechanism how the value needs to be identified in these 5 businesses. First, purchase or sale of foreign currency. We have this authorized dealer. Who is an authorized dealer? Authorized dealer is a dealer appointed or a permission obtained from Reserve Bank of India for the purpose of buying foreign currency or selling foreign currency. If an employee on a business visit needs to visit, say, USA, and the process of this particular visit, he needs some foreign currency. So the employee says, I need $5,000. So what they do? They go to this authorized dealer, they fill a form, buy that $5,000. How? Assuming today's market rate is 76, they pay $5,000 into 76 and then they get this money. For that, they pay some commission to this particular authorized dealer. So this is first activity of foreign currency. So purchase or sale of foreign currency, how we determine the value of supply. Second, booking of tickets for air travel by agent. So if I have to travel, there is this agency is called what do you call air travel, air agents. No, other than book, no, this Make My Trip or Go Ivibo. Other than those are all e-commerce operators. There are travel agents who does this booking. These days, technology is so simplified. Sitting at your home through mobile or through internet, I can do the booking. Now, this was a concept where there was an air travel agent. Now, why do someone visit an air travel agent? Air travel agent is a person who does a package tour. Say, I have to visit, say, Kashi. If I want to visit Kashi, this particular travel agent says, from Bangalore, I book a ticket to this particular state. From there, I book an accommodation. Again, I'll book a local trip. I'll provide a guide and all. Now, as a whole, there is a package arranged for me. Part of that, there is a travel ticket booking. So in case of a travel ticket booking, how do I determine my value of supply? Life insurance business, insurance, in case of a individual life, how do we determine the value of supply? Value of second-hand goods. There are these dealers, there are these people who, like, you can call them as a pawn broker or a person, like example, Maruti True Value. I hope you would have seen this Maruti dealer called MTV, Maruti True Value. What does this MTV do? They buy your car, old car, and they pay money for you. In turn, that car will be sold to another customer, like Cars 24. They buy your old car and they do some refurbishment, they put an advertisement and sell that car. So in case of an old second-hand supply of second-hand goods, how do I determine the value? The last is your redeemable vouchers. These 5 transactions are explained in my Rule 32. Let me see if there are any questions so far. Priyadarshini has a question. Is the price favorable to the agent will be considered as per Rule 29? See, Rule 29 is in relation to the person who is seller, the person who is supplying the goods. From principal, the goods comes to agent. So a person who is supplying, principal cannot choose what is beneficial to the agent. Principal always choose what is convenient to him. Now, open market value is convenient or the price which is sold by agent is convenient. Now, open market value generally depends on product to product, depending on industry to industry. So 90% now, in case of say cement business, there is something called MRP. So always it is easy to go with my MRP because a dealer can sell maximum up to MRP. And if that is a price known, it's easy for me to fix 90%. So nature of the business, they choose whether to go with open market value or 90% of the value supplied by the dealer. At times it so also happens, Priyadarshini, if the agent sells the goods to a related party, their price is infused. Again, your valuation goes for a toss. So it depends on the principle. Business to business, this theory is adopted. To start with, foreign exchange. With respect to this foreign exchange, where purchase and sale of currencies involved. Rule 32 says that, look, this dealer, authorized dealer, converts a foreign currency to INR or INR to foreign currency. There is a reference to RBI rate. So the number of units which is converted from foreign currency to INR, what is the gap between the authorized dealer rate to the RBI rate? RBI says, say 76 per dollar. This authorized dealer sells at 78 rupees per dollar. There is a gap of 2 rupees. Now he sells $10. $10 into 2 is your 20 rupees, which is the price which is derived as a value. So the price is nothing but the value, that is difference between the buying rate or selling rate vis-a-vis the RBI rate. So the gap, what is there, that will be your value. On that, GST is applicable. This is with respect to foreign currency. So what if RBI rate for that currency is not available? What if the value RBI rate is not available? Then 1% of the INR which has been transacted, that will be your value. Too high, sir. What we will do? Then, if none of those currencies are having an INR, then that currency, if it can be converted, if it is converted to a nearest currency, and from that nearest currency, like example, Singapore dollar. For that Singapore dollar, assuming that there is no, customer has come from Singapore, he has given Singapore dollar and he has taken US dollar. A customer has come to authorized dealer, he has given Singapore dollar and he has taken US dollar. That currency, you convert either Singapore dollar or US dollar into INR, 1% of that amount, whichever is less, would be considered as your value. Now, this is your third option. Sir, I am not happy with this thing. So they have come with a mechanism where they say, you exercise this option at the beginning of the year where I'll give you a simple mechanism. How? They say 1% of the gross value exchange or up to 1 lakh rupees, minimum 250 rupees. Now, 90% of the authorized dealers, like this travel agents, these authorized dealers, they adopt this particular equation 90% because this is the easiest formula they can apply. What they say, 1% of the gross amount which is exchanged, which is up to rupees 1 lakh rupees, subject to a minimum of 250 rupees. So this is what they say, you pay up to 1 lakh. So what if it is exceeding 1 lakh, up to a sum of rupees 5 lakh, up to a sum of rupees 10 lakh, up to a sum of rupees 10 lakh, pay 1000 on first 1 lakh. Please refer to page number 7.48. There is a table given. So up to 10 lakh, you pay 1000 plus 0.5% of the balance amount. 0.5% of the balance amount. So what if the converted value is exceeding 10 lakh? Then base price 5500 plus 0.1% of the remaining amount, where there is a cap of 60,000. This is just a conversion factor, not much to worry or boggle with. Next, in case of a travel, I was talking about a travel, where there is a tickets have to be booked. So in case of a travel, if there is a domestic travel, 5% of the basic fare shall be considered as your transaction value. If it is an international travel, 10% of the basic fare. Please remember, if I buy a ticket, a travel, say I travel from Delhi to Chennai. If I travel from Delhi to Chennai, I book a ticket through, say, a travel agent. This a travel agent, he in turn purchases from IATA. IATA sells this ticket for, say, 5,000. If you look at 5,000, they say basic fare 3,200, some ATTF charges 800, airport charges 1,000 rupees, all put together 5,000. So the basic fare is 3,200. 5% of the basic fare is my transaction value for domestic within India. If it is an international travel, then my value of supply will be 10%. So within India, 5%, outside India, 10%. This is my value as per Rule 32. Now, there is a next aspect with respect to life insurance. Very simple. In case of a life insurance, let me come to this line, where the insurance is attached with some coverage, where there is a risk-related coverage. Then they have given that your transaction value will be, the insurance premium less that investment which is there. Your amount allocated for that investment will be reduced. That shall be your value of supply. So what if it is one-time annuity? Means I pay once, I never pay premium. Then 10% of the single premium. So what if this is charged year on year? First year they charge 25% as a premium value. Then next year onwards 12.5% will be the value on which GST has to be paid. So what if it is any other policy? Then entire value on that GST is applicable. So this is a value in relation to your insurance. Page number 7.51. Now we are at 9 p.m. Let us stop at this Rule 32. There are another 2 rules to be covered. The next session, whenever we will touch upon the other 2 rules. Continue with that. We will deal with the next topic for that day. Till then, see you all. Good night. Ram?